Okay, welcome to episode 10. So in this episode, we're going to cover channels. So I'm going to show you a few variations of channels and also the way that I've come to use channels now myself, because I just feel like it's more precise. But you can see all channels are primarily used for is for you to identify the overall trend of the market. So you see, for example, this whole high down to here. For you, all you would do is just use that rectangle, I think it's parallel channel tool, and then literally that is your bearish trend. So you can see we're just creating lower highs and lower lows. We're in that nice stage of consolidate. We're in that nice trending stage, sorry. And then you can see we reach that period of consolidation, and then what happens? So from that period of consolidation, we now enter a bullish market. So now you can see the difference. I'm just outlining them just vaguely, roughly, so you can see. So we've got a bearish market, we've got a bullish market, and then price obviously continues up, and you see we hit perfectly that break and retest. Price then went down into a bearish market. So we can see, say, from here, we can see then price started creating a bearish market. We've now had a breakout. So with trend lines, with channels, which is almost like two trend lines anyway, but with channels, what I typically started doing is, because even in the examples I've given you, you can see there's various ways that you're going to draw the channel. So throughout my own learning of the markets or understanding of the markets, I came across a way that I like to draw a channel. So you can even see here, you got like that bullish channel there. So it's just, channels primarily just used for you to identify the overall direction of the market and just use it as like an upper and a lower barrier. That's primarily what a channel is going to do. But channels can also present high probability trading setup. So for example, if you look at pound yen here, so we had this extended rally on pound yen to the upside, and then we see price pulls back. So if we piece together our kind of trading method, we're now looking at, this is our swing low and that is our swing high. So we're looking at price to start showing some sort of retracement, starting to see price move higher. So we're looking for price to decelerate, which is what we got here. So you might as well say we got a deceleration. Deceleration first came in here, if I'll be honest. So we got that deceleration and we dropped right back down. So in that daily structure, that B to C leg, we've got corrective structure, and that's where personally I like to apply my channel, so to speak. So when you see pound yen here, what I tend to do is, we can see pound yen, we've got a nice channel here on pound yen. So let's just take that fib off. We've got a nice channel here on pound yen, and again, leading on a few things I've showed you in previous episodes, you've got that support. So as long as we trade within this channel, we're looking for bears to remain or stay in control of the market. But as you can see, bulls took over, broke above, and we absolutely rallied. And as you can see, price consolidated here. So we had a long period of consolidation. Again, understand your market. Long period of consolidation before we rallied up again. Then had consolidation here with a little bit of where you can. More occasion, this would more be, for me, a trend line, which we're going to move into next. But you could also apply channels. But all you're looking for is a series of lower highs and lower lows, or a series of higher highs and higher lows. So I'll show you how I've come to use channels now for me, which has provided me with a bit more accuracy than normal. So if you have a look at Aussie New Zealand here, so we can see it's clear that we've got an area where price is rejecting from. So a standard channel, where would you draw it from? Would you say now we've broken out? Would you then say we're going to put it here? Then if we're going to put that there, would we then say that's the top, but the top doesn't really quite fit, and that top kind of fits better? So what I've come to do is, So with my channel here, I think it's either this one, no, it's not that channel, it's this channel. So what I've come to do now is just basically use two channels. So I'll show you why. So I'll use two channels for the upper boundary and one channel for the upper boundary, one channel for the lower boundary. So you see here, so from that wick low, I'll apply it, and then I'll put it up to say around that candle close here. Reason being, we see support, we rallied up, support, we rallied up, and now we're back into that region again. So for me, that fits a lot better and shows you much more clearer of what price potentially wants to do. And then when we look at our upper region, so I'd say to myself, let's have a look at this upper region. For me, that looks fine. We got resistance, 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 resistance. So I've more made it look like zones. So me, like I said, I'm not really one that wants to be very, very specific. I'd rather look at price the way it wants to be seen, not how I want to see it. So when it's coming to Aussie, New Zealand, you can see we have an area where price comes to again, and you can see many attempts of, or many examples, should I say, of the same thing. So you can see here now on Aussie, New Zealand, we've got the same thing happening practically again. So if we get above this previous support and resistance, you see price rallies to the top of, you see price rallies up to the top of the channel, should we say. So once price breaks above here, we might have an extended rally right back up to the top of that channel, which we potentially could see. We could see price rally right back up to the top of that channel. So how would we look in from a swing trade perspective? So you can see we'd have to go down into a lower time frame for that break. On this occasion, you'd be looking at invalidation, complete invalidations like that, and obviously that would have been a 2-to-1. But for me, if you zoom down time frames, you wouldn't need to have your stop would just need to be below this region here. And same thing again, once price breaks above and holds, we could have our stop just below that previous level, and then you see the risk and reward that you can have. So that's how you're going to use channels for just more of a region. So I'll show you an example that's just come to mind on US dollar yen. So let's go down to US dollar yen here. So you can see on US dollar yen, at first price actually looks quite choppy. But when we apply, for example, the way that I do channels now, so you see again, like I say to you, we don't know where would he put this low. Here, would he put it there? Would he put it down the bottom? So what I do is I give price room to breathe. That's what I do. So I give price room to breathe. So with this channel here, I'm looking at price like this. So from that little consolidation region here, so let's just expand this. Sorry, so let's just expand this from here. So we give price a bit of room to move. So we say that last candle was around here. So when we look at UJ like this, you can see it looks more likely that we're going to see a breakout now. And it can also be used as support or resistance, because essentially we've got this level here. You can have, how many levels are we going to have? Like I said before, you see a lot of people will use so many support and resistance levels that they don't know what to choose, because essentially that's all valid resistance. But what I will do is look at price like a region. So I'm looking at price like a region. So for example, we're going to see price come into this 109.486 area. Then all I'll do is just drag my channel up higher. And I'll just look at price like that. Once my channel is dragged up higher, then you can see that's a resistance region here. And that's a support region in terms of that channel. So now I'll just use two channels to create for me a support and resistance region. Through my obviously use of this, I find this a lot more valid. I also think it's a lot easier to understand, and it gives price a bit more room. So because we've had this break, essentially we're looking for price to retest somewhere in here and then potentially drop back down. So if that is what we're going to see, this channel would portray that much clearer than if we just had one line. Having a region gives price the fluctuation to understand this is where buyers keep stepping in. So you can obviously, if we introduce that support here, so right now with UJ, we're sitting at this area of support. So what do we naturally expect? Naturally, we expect buyers to step in at this region to do what? Just have a pullback. But now we've got areas where we can see where's the pullback likely to come. Either in here, or in here. And then we should see price obviously move and break lower. So for me, using channels like this, like I just said, is much more effective and much more efficient. And I do believe your strike rate using a channel like this is going to provide you with much more clarity in the market. For example, even oil. So they're just coming to mind. So even oil now, if we have a look at oil like this and we say, you're looking at the oil market here, you're saying to yourself, that candle close, we're going to drag it down to the candle wick. So you can see every time we come into this region, it presents us with a buying opportunity. So when you expand this or keep oil, for example, you just expand it all the way, continue on while we're in this bull market, you look at oil like that. In that region here, it's a nice time to look for buys. Again, also if you're selling, you look at price and you expand it to the upside on this occasion. So for me, every time oil kind of comes into that region here, you see a little bit of a sell-off, but because we're more bullish than bearish, you can see, so we can even put it like that, yeah, because we're more bullish than bearish, you can see the trend is continuing up, up, up. But we know a natural healthy pullback right down to these regions, again applying our fib, all we'd be saying to ourselves is that's a nice healthy pullback for us to get back in on the train ride at 57,500, around that region, for us to push higher up to 64. So when you look at price like that and give price a bit more room using channels, so don't be scared to have an idea and alter it, or have something old and alter it, because essentially that's what you need to do. You need to find your own niche. You need to understand how price can work for you. So even with euro yen, just finding another example here. So euro yen, even with me, again, it's another scenario of, with euro yen, we had this region here, but if we drag it up just to the candle body, so you see the body to the tail, then you can see we've got that area on UJ where we're looking at it and we can say, we can see that this is in a bullish channel. But now we get to have a bit of more of a detailed estimate of where and when this market may change direction, because right now you can see we're trading bullish, but you can see it's more of a rising pattern. So we're trading bullish right now, but when you take a step back and look at the weekly, you can see we're in a white rising pattern. So this pattern may not last for long, but right now you're seeing good opportunities to get back in the trade. Whereas if you only use a channel how it's meant to be used, or traditionally used, should I say, in terms of, here, so I'm thinking of this channel, you'd only be looking to say, okay, I'm going to align it here, I'm going to align it there, and I'm just trying to wait for each side to be hit perfectly. So it's better to have a region of price, because I think it just provides you with a bit more accuracy. That's personally how I look at it, even using the previous example I just gave you on pound yen. It's just a lot more clear in my opinion. So you've got that high here, so you can already see even from there, just bringing that down just so slightly from that close to the high, you can see we've got much more points that make price seem more understandable as to why it moved like that. And then when we bring it here as well, so on this occasion, we want to bring it from the low, let's just do it that way. So we're going to bring it from that low here up into there. So you can see that's just a better region. Look, buyers have stepped in. We get that corrective structure here. So let me just highlight what I mean by corrective structure so you don't have to guess. We get that corrective structure there, we drop. We get that corrective structure in here with that low, we've dropped. So it's more like that, and then we dropped, and then this time we didn't correct structure. If we're gonna stay, we need to see that drop down. What happened this time? We broke out, small retest probably on a lower time frame, and then we absolutely rocketed. But using a channel like that for me provides a lot more clarity and a lot more high probability setup. So I hope you are going to take this on board and utilize this in your trading. Thanks for watching.